Hello everyone, how's it going? In this video, we're going to talk about Alibaba and some interesting insights about Warren Buffett, the type of investments he has done in the past, the type of companies he looks for, and what is that resemblance between his investments and Alibaba. So let's get started. So number one, this is an article written back in 2015, and it shows how Warren Buffett made a killing during the financial crisis of 2008. They basically showed that between 2008 to 2011, how he invested billions of dollars into these companies that were beaten down by the market. He invested into Mars, Goldman Sachs, Bank of America, and Dow Chemical. This gigantic crash that happened back in 2008, Warren Buffett simply jumped into it. And the interesting fact is, this was his most active investments of his career. The last investment he has done was back in 2001. So you see that gap. He was inactive for those many years, and only when he saw the market crash, the global economy melting down, that's when he went in and jumped out. Now, there is this interesting book. It's called The Outsiders, and it shows 8 unconventional CEOs. These were people who were not in the limelight. They ran their own thing, and they were exceptionally well, not just from the operational point of view, but even from the market public perspective. They gave huge returns for their companies. And there is one chapter dedicated for Warren Buffett himself. And in that chapter, there is this page. This page shows something interesting about the type of investments he has done. So he talks about how Warren Buffett gives this analogy of Mr. Market. So Mr. Market shows up every day. He's a fellow. He shows up every day to either buy or sell from you. And the more manic depressive this chap is, the greater the opportunities available to the investor. Basically, we talk about how they talk about how you should be greedy when others are fearful, and you should be fearful when others are greedy. We talk about it, but this is somebody who's living the embodiment. He's doing that real time. Look at these investments. American Express, he bought it back in 1964, and they were going through the salad oil scandal. This market was beating down. Washington Post, they had the issue of government not giving the broadcasting license challenge. Then you had Geico, which was undergoing a potential insolvency. Wells Fargo, they was going through the Southern California recession and real estate crisis back in 1989. Freddie Mac, the recession, and the SNL crisis, 1989. General Dynamics, post-Cold War defense industry slump. So you can see how these investments were done when they were beaten down, where there was issues going on in the market and companies. People did not think these companies were worth investing. That is when he went in and jumped onto these. Now, this is just a speculation. So this is just theory, and a theory could be wrong as well. So look at it with a pinch of salt and just do your own research before you think about anything. And right now, Alibaba is sitting at a market cap of only $402 billion, which is relatively higher compared to the type of companies which Warren Buffett and other investors, value investors, would like to do. Because big companies, they don't move a lot. But looking at these aspects, this is the annual chart, and you can see the continuous increase in the revenue growth of the company. This company came in the market, public market, relatively new compared to the other companies, but you can see that the revenue has been growing at least for the past few years. And you can see the quarterly growth has been increasing also, except for the anomaly back in December 2020. This is mostly because of the Singles Day that they held in November of every quarter. And that's where you can see they have a huge kind of business going on that day, even to the extent where they have to reduce the amount of traffic coming in so that they don't have logistics issue going on. But this is where the company is continuously growing. The intrinsic value of the company is continuously increasing. But there is something even more interesting. Now, this is the amount of internet users in China. This is between 2008 to 2020. And you can see how the population of China is about close to 1.3, 1.4 billion people. But look at the amount of people who has internet in China. The internet is not very popular in China currently. And you can see that it's going from 300 million to right now sitting at about close to 1 billion or $900 million. 900 people in China who are having internet, and every year it's growing. And look at the growth of Alibaba's internet users who are going and shopping on Alibaba's properties. Look into this. They started off with 434 back in 2016, and right now they're also sitting at about $828 million. So that's the amount of people who are coming to Alibaba on a yearly basis. And you can see there's a close resemblance from the people who are converting into internet users. You can see how Alibaba is that growth, which is fueled by the growth in economy of China in itself. So if you forget about everything that Alibaba is doing with regards to global perspective, with regards to the China regulations, with the way Alibaba is being treated on a global level, still they have this interesting play going on with the development of China. So if China grows, Alibaba grows basically with them. So there's that interesting aspect, and still the market is beating down this company. And if you look into the market cap of other companies and the multiples that they're trading with, there are companies who are trading at about multiple millions of revenue. There are companies who are making revenue in millions, and their market caps are several $100 billion. But this is a company which is making revenues in several $1 billion, close to almost to the market cap of the company. If you're looking at the annual, their revenue coming in is more than the market cap of the company itself. So you can see how the company is being treated now, and something interesting to look into. Do your own research before you do anything with this company, but these are some interesting insights just to keep an eye for. I found it interesting, wanted to share with you. With that, take care, stay safe, bye-bye.